Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing jargon of corporate filings to tell you what is really going on. And today we're digging into T. Rowe Price's Target 2005 fund. Let's just say this report is packed with numbers, and some of them might surprise you, especially when we talk about how much it costs to invest here. So what is this Target 2005 fund all about? Think of it as a fund designed for folks looking for retirement savings, aiming for growth and income. It is not a single investment, but rather a collection of other T. Rowe Price funds. The idea is that over time, it becomes more conservative as you get closer to retirement, which in this case is around the year 2025. It has different share classes, like investor class, advisor class, and I class, each with slightly different costs and investment minimums. Now, let's get to the nitty-gritty, the costs. For a hypothetical $10,000 investment in the investor class of the Target 2005 fund, the cost for the last 6 months ending the 30th of November 2025 was about $23. That sounds small, but as a percentage, it is 0.45%. The advisor class, however, hit you with $36 or 0.70% for that same investment. And for the I class, which often has lower fees for larger investments, it was just $16 or 0.30%. So you can see how choosing the right share class can make a difference over time. The fund itself has total net assets of about $48,969,000, which is roughly $49 million. It holds 27 different investments, and its portfolio turnover rate, meaning how often it buys and sells its holdings, is 12.1%. That is not super high, suggesting a fairly stable investment approach. When we look at what the fund invests in, it is heavily weighted towards bonds. About 45.9% is in domestic bond funds, and another 17.3% in international bond funds. Equity funds make up a smaller portion, with 24.1% in domestic equity funds and 9.1% in international equity funds. There is also a small slice for short-term investments. This allocation shows a clear lean towards debt instruments, which are generally considered less volatile than stocks. Now let's talk about the big players in their portfolio, the top 10 holdings. This is where you see the actual underlying funds they're investing in. The largest holding by far is the T. Rowe Price Limited Duration Inflation Focused Bond Fund, making up 19.5% of the net assets. Then we have the T. Rowe Price New Income Fund at 19.1%. These two alone account for almost 40% of the fund's investments. After that, the percentages get smaller with the T. Rowe Price International Bond Fund, US-edged at 7.1%, followed by a mix of growth value, emerging markets, and high-yield bond funds. It is interesting to see that even though this is a Target 2005 fund, meaning it is likely aimed at people getting closer to retirement, it still holds significant exposure to equity funds like the T. Rowe Price Growth Stock Fund and the T. Rowe Price Value Fund, both at 4.7%. This suggests a continued focus on capital appreciation, even as the fund is approaching its target year. Diving into the financial highlights, we see the net asset value, or NAV, per S-share for each class. For the investor class, it ended at $12.31. The advisor class was a bit higher at $12.45, and the I class was $12.34. These numbers represent the value of a single share of each class as of the 30th of November, 2025. Looking at the total return for the 6 months ending the 30th of November 2025, the investor class saw a return of 6.67%. The advisor class was slightly lower at 6.59%, and the I class had the highest return at 6.75%. If we look at the longer term, say the year ended May 31, 2025, the investor class had a 7.27% return. The advisor class 6.96%, and the I class 7.47%. These returns are pretty solid, especially considering the bond-heavy allocation. Let's zoom in on the actual portfolio of investments as of the 30th of November 2025. You can see the detailed breakdown of bond funds, equity funds, and short-term investments. The total cost of these investments was around $43,762,000, and their value was $49,006,000, showing a gain of about $5.2 million. This is a positive sign indicating that the fund's underlying investments have appreciated in value. Within the bond funds, the massive holding in the T. Rowe Price Limited Duration Inflation Focused Bond Fund with a value of $9.55 million and the New Income Fund at $9.36 million really stand out. This confirms the fund's strategy of using these specific bond funds to achieve its investment objective. On the equity side, the T. Rowe Price Growth Stock Fund and the T. Rowe Price Value Fund are each valued at over $2.3 million. These are key components of the equity portion of the portfolio, aiming for capital growth. Looking at the statement of operations for the 6 months ended the 30th of November 2025, the fund's net investment income was $935,000. This means the income generated from its investments after expenses. The fund also had a net realized and unrealized gain of $2,445,000. This gain comes from selling underlying funds at a profit and the increase in value of holdings that were not sold. All in all, the net assets increased by $3,380,000 from operations during this period. The statement of changes in net assets gives us a broader view. Over the 6 months ending the 30th of November 2025, the fund saw an increase in net assets from operations of $3,380,000. However, there was a decrease of $6,404,000 from capital share transactions. This means more money was redeemed from the fund than was invested. This led to an overall decrease in net assets of $3,024,000 during the period. The total net assets at the end of the period were $48,969,000, a slight decrease from the beginning of the period. This reflects the interplay between investment performance and investor activity. Now, a quick glance at the notes to the financial statements. These notes provide crucial context. For example, Note 1 explains that the fund invests in other T. Rowe Price funds, and these are considered affiliated companies. It also details how they handle in-kind redemptions, which is when the fund gives out shares of underlying funds instead of cash. For the 6 months ending the 30th of November 2025, they realized $359,000 in net gain on such redemptions. Note 5 is particularly important as it details related party transactions. The fund is managed by T. Rowe Price Associates, Inc., and certain officers and directors are also involved with the underlying funds. The annual fees are all-inclusive, ranging from 0.45% for the investor and advisor classes to 0.30% for the I class, generally decreasing as the fund's stock exposure reduces. This structure ensures that services are provided by the affiliated company, T. Rowe Price Associates, Inc. So, what is our take on the T. Rowe Price Target 2005 fund? On the positive side, the fund's investment performance has been solid, with good returns driven by its underlying holdings. Particularly in the bond market, the overall asset allocation, while heavily weighted towards bonds, provides a degree of stability, which is expected for a fund approaching its target year. The fact that its investments are worth more than their cost is a strong indicator of good management. However, there are a couple of points to consider. The cost structure, especially for the advisor class, is higher than for the investor and I classes. While the I class offers a lower expense ratio, it comes with a significant minimum investment requirement. Also, the net decrease in assets from capital share transactions indicates that more investors are pulling money out than putting it in, which could be a sign of investor sentiment or a natural rebalancing as the target date approaches. Looking ahead, the fund's strategy of investing in other T. Rowe Price funds means its performance is closely tied to those underlying funds. The continued allocation to equities suggests a belief in future growth potential, but this also introduces market risk. Overall, it seems to be a well-managed fund with a clear strategy, but investors should pay close attention to the share class costs and the fund's asset allocation as it moves towards its target retirement year. Alright, that is our breakdown of the T. Rowe Price Target 2005 fund's latest filing. What is your take on these numbers? And do you think this fund is a good option for retirement savings? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord community linked in the description for more discussions and exclusive content. Thanks for watching. See you next time.